Good morning, everyone, and welcome to the European crossover webinar. And we did see some action happen yesterday in the Asian session. We certainly saw some movement yesterday with the dollar Swiss, but also in the Asian session, we saw some good movement here with the Australian dollar. Speaking of which, boy, you see here that took a pretty good little dip, but then we saw across the cross rates, boy, did we see some good action against the Euro Aussie, sterling versus the Aussie yen. So obviously there's be some catch ups to do here as opposed to yesterday. It was just a carryover from the previous day, which was for most people in the globe was still a holiday. So we hadn't moved that much, but we had done the analysis. So it had not changed that much, but we certainly have a big change of pace since then. We also saw the dollar index come in and challenge some key levels too, and we're still going and pushing up against that. So we'll get to all that. We'll go on and start with and look at the cable. We talked about this also important here. Matter of fact, we're already here on the cable. Look at that. How do you like that? We talked about here on the cable about this 2980 being the pivot, and that if we go in and break the pivot, we were looking for a move down to 29.16. Well, lo and behold, we're just about there. Actually, the low is 29.15. Let's see here. There you go, 29.16 right there. The low for today's market is 29.15. There's our bias chart support. And we said that if we get a weekly close below the pivot, then we're extending this range, which would take us down here to 26.18. But we have come into our support there. There's our support there, 29.16, low for the day, 29.15. Let's go on and move into the morning bid. Scotland's First Minister Nicola Sturgeon is due to make a long-awaited speech this afternoon setting out a path forward for Scotland and make explicit reference to the possibility of a new referendum on independence. While London insists the 2014 vote in favor of remaining in the United Kingdom should be the final word, Sturgeon argues the closed chaos triggered by the Britain's Brexit vote 2 years later, in which Scotland heavily backed Remain, creates new facts on the ground. Fostering a decisive shift in the local mood towards independence will be key to whether this gets momentum. On Thursday, a huge crowdfunding grassroots indie group will begin a door-knocking campaign to push up support for a new Scotland. Italy's ruling parties, the right-wing League and the anti-establishment Five-Star Movement, were always going to the strange bedfellows, and now they are loggerheads as they jockey for votes ahead of the European Parliament elections. On May 26, in the early hours of this morning, they managed to agree on an economic growth path, and after a row of debt relief, the Five-Star administered Rome municipality, but investors are still pricing in the chance of a government collapse over a separate feud about the corruption. Armando Siri, a transport ministry, an official and chief economic advisor to League chief Matteo Salvini, has been put under investigation for allegedly accepting bribes. Like that's news. Anyway, let's go on and move on to the markets. Italy, corruption, bribes. I mean, come on. Isn't that like oxygen? But anyway, Wall Street's ebullience, which saw the S&P 500 reach a record closing high on Tuesday in the thick of the first quarter earnings season, was matched by Asian markets overnight. This week's oil price surge and planned removal of U.S. waivers on sanctions with Iran, which mostly affect the big Asian economies, and a warning on future chip demand from Texas Instruments after the bell on Tuesday dragged down Asian markets despite the U.S. rally. The sour outlook from TI, which saw its stock drop 3% after hours, hit the likes of Samsung overnight, and South Korea's Kospi underperformed with losses of almost 1%. Japan's Nikkei also fell as Nissan toppled 4% on reports it would announce a large cut to its earnings. The White House confirmed U.S. Treasury Secretary Steve Mnuchin and Trade Representative Robert Litzinger will, I don't even feel like even reading that, return to Beijing next week to resume trade talks. Okay, let's go and move on. That story is so old. Oh my goodness. The dollar's gain was partly caused by rising expectations for Friday's first quarter domestic product after upbeat readings on retail sales and exports, but also impressive earnings seasons, with almost a quarter of the S&P 500 now reporting Aggregate annual profit growth is about 6% ahead of the expected 1.1% overall contraction to the full 500. But the dollar gained as much because of the weakness in the other major markets. Sterling has led the move lower, dropping to its lowest move since mid-February, as Brexit talks between the government and opposition Labour leader appear to have floundered. I'm going to put any more about Theresa May. European stock futures were down before the open with better than expected results from Credit Suisse. When I say that I don't even want to talk about this stuff about U.S. and China talks, it's apparent the market doesn't care either, because when you look at the Aussie dollar, look at the Aussie dollar. Remember, it was supposed to soar to 72, 73, 75. Look at the Aussie overnight. I mean, come on. I mean, the Aussie got literally creamed, and the market has gotten tired of listening to this, of the U.S. and China talks. So it really doesn't matter anymore with those markets anymore. When we saw the Aussie just going and spiral out of control with the inflation figures. Speaking of which, look, Aussie stung by soft inflation. U.S. dollar holds near 22-month high. The Australian dollar dropped 1% on Wednesday after weaker than expected inflation numbers heightened on the prospect of an interest rate cut, while the U.S. dollar held firm within a whisker of a previous session's 22-month high. The greenback was propelled higher by stronger U.S. housing data, latest indicator to suggest the American economy is outgrowing rivals, encouraging investors to snap up the U.S. currency in recent weeks. Data on Wednesday showed Australian headline consumer price index was flat in January through March, below forecasts and the lowest since early 2016. Given the large decline over the last 24 hours, I can see the Aussie bouncing back later today just on profit taking, but I think in general it's likely to be weak for some time, said Marshall Gittler, currency strategist at ACLS. He also noted that data, including currency managers, were long the Aussie. That means there are plenty of sellers left in the market. I don't know. I can't believe. Well, yeah, these are the same people that are still hanging on to that story that the U.S. and China is going to have some kind of success. So not too good on their part. The Aussie was the biggest mover of the main currencies. Falling at 1.5-month lows is 70.27. The dollar index, which measures the U.S. currency versus a basket of major rivals, stood at 97.66. Data on Tuesday showed the sales of single-family homes in U.S. jumped to near 1.5-year high in March. The European economy looks particularly weak relative to the U.S. economy, and this highlights the euro weakness, said Taikuya Kanda. The United States is now expected to have experienced firm growth in the first quarter, reinforcing the dollar's strength relative to the euro. First quarter GDP data on Friday could strengthen the case that while the current period of global expansion in its latest stages, the U.S. is on a firmer footing. The weakness in the euro allowed the Swiss franc to strengthen from 6-month lows. And let's go and get on to the equities. So look, this is what I was talking about. Remember, this thing was going to soar to 73, to 74. Well, look what happened. You see what I'm saying? And it's been falling and falling and falling. But and it's what we talked about for the last couple of weeks. It's the boy that cried wolf, and it's just the market's got tired of waiting now. The S&Ps, that's a whole different ball game because it's reflecting what the U.S. economy continues to chug along. But this whole thing about well, they were going to be held up, and you see the same thing here with the dollar yen. Remember, this was on its way to 113 and 114, and look at that. You know what I mean? Nothing. So the market's just grown tired of this U.S. China, the carrot in front of the donkey. It's not working anymore. And matter of fact, the market's going the other direction. So let's go on and move on to the analysis. So we had here the euro support 12.15. Now we actually got below 112 yesterday as this market pushed lower. We were talking about that at the beginning of the week with the Asian analysis. Ahead as we started out the week was we're still looking for a move down to 11.49. As weak as this has been, and there's still that like they're trying to hold here in the euro, but certainly the drag has been to go on and continue to push lower. We did come down recently to looks like about 11.95 just now, and we're coming off of those lows. Let's go and get a little bit closer look here with the euro on a daily. We've held at this support here. When you look here on the daily, this 11.93, but I still think that we're on our way to 1149 here. Really on the, just with the dollar index, wanted to challenge that um, 97.89. I think we'll get there. Now we came pretty close yesterday, though. We got up to 97. What was it, 97.78? So, and it was important. They weren't able to close above that 97.65. So I think that's going to be key as the rest of the week plays out to see what the dollar index does. But we know we've had the massive amount of bulls since 2016, and those people are not going to give up their long positions in the dollar unless we see a pretty good pullback. And we did not see that the previous week. So the door is still open for this euro to go lower. Support, we're going to move it down to 1182. We still think we're going to 1149. There we go. And this thing, boy, I tell you what, I will give it this. It sure is when it's being dragged down, it's dragged down, kicking and screaming because it dipped below 12, tried to pop back up, then came back below 12 and trying to pop back up again. So it's going to be right here at 1180, there, 1182, we'll call it. But we still think we're eventually getting down to 1149. Okay, and resistance will come in right there, 1252. When things were to turn around, we start to move higher, move to 1252, and you'll see any longs take profits against that, and then that would be a key for this market to try and push above intraday. That is. Okay, so we made it to our area here, here in the cable. We're looking for 2916. If we broke the pivot, which is this 2980 that's been in place for, I think I mentioned something like a couple of months when someone's asking me about it or something like that. But and if you look at it, this pivot has actually been in place since August of last year. Look at that. So we had our support at 2916, and the low for today was 2915. I mean, if the dollar were to push higher, I like this 2916, so I think that the market can make a stand against this. You'll see a little bit of covering, but if we do dip a little bit further, that'll take us down to this 2876. There we go. So we'll go with that, and that's a 50% of the move. Resistance will be the pivot, 2980, which was support previously. Not then, but I'm saying over the last week. And let's go on to the Aussie dollar. Yeah, all this silly talk about the U.S. and China, and look, here we go, are falling completely apart, making it all the way down to our old friend, remember from back when, 70.27. So that'll be the support here, right there, 70.27. We actually remember if we started at the beginning of the week, we were looking actually since Thursday when we did the Asian analysis. Uh, for that night before. We're looking for a move down here because remember we talked about it there. You look at the Asian analysis, it says because of the reaction, poor reaction to the jobs data, which was good jobs data, it couldn't even take out 72 cents. Much less rally at 72.33. So I was making looking. We were at the beginning of the week. We're looking for a move to 71.11, followed by a secondary move to 70.68. 70.68. This Aussie completely fell apart, making it all the way down here to 70.27. It is pretty oversold at this point, but like I said, the market just got tired of that. The boy cries wolf, US China stuff. So this whole idea that the Aussie was going to rally is not going to happen. It couldn't even rally on its own good jobs data and take out 72 cents, much less making any moves to 73, 74, and all that kind of nonsense. So it's 70.27 is going to be here. And this thing really came under pressure. I mean, it even blew past our secondary target, which was 70.68. Resistance will now be 71 even. Well, we finally made it down here, just about to that area here, that 66.12. That'll be our support on the Kiwi. And resistance will be right there, 66.90. So if we get a bounce back, that would be the key right there, 66.90. Quite a ways off, but the market is very oversold at this point. What we're saying is if we're looking at a 2-hour chart, look at all these bars that it took out on the dailies. Within 2 days, look how much damage we've done. You've taken out all this back to the 11s. Unbelievable. And let's go moving now to the New Zealand yen. Well, we're pretty oversold here. It's going in. And just a little bit more support below that, which is 73.78. So we're going to go with that, 73.78. That's a good little zone right here of volume here. Actually move this a little bit lower down there to 73.75. So let's go with that, 73.75. We're actually looking on the daily. Let's move this onto the 2-hour chart. And you can see resistance comes in right there at 74 cents. Actually, just a little bit above right there. 74.42. Next up is going to be the dollar cat, and this thing has just been nothing short of amazing. Oh my goodness, and I can't believe I bought it. Me and a few folks bought it here in the Asian section. It was a couple of days ago. I mean, one tick off of the bottom, or the bottom tick, and I didn't even hang on that long. Doggone. But this thing has just motored ahead like nobody's business, despite the crude oil moving higher. We do have Bank of Canada. I guess the market expects it to come in fairly soft. And holy smokes, look at this thing. We did say, that the next level, once we got past that, because we talked about this. Remember, that was also in the Asian analysis. We're talking about, hey, look, we still have the opportunity to close, above 33.82, which we did. Market kind of pulled back a little bit, but we reasserted ourselves, okay, and zoomed up. Boy, what a move here! God, can you imagine someone trying to stand in the way of this thing? Oh my goodness. I think Amanda was targeting 34.25. So you can imagine if someone said, you know what, now I'm gonna step in and try and short this thing. Oh my goodness, you get run over. And certainly you would not want to be taking short against, head of the Bank of Canada, because if they come in, the market believes they're going to come in softer. This thing can still continue to rip up, and we still believe that it will make a move up here towards this 36.50. Can you imagine if oil does slide? Boy, this thing would really take off like a scalded dog. So it's going to be right here at 35.04. There's your resistance. This thing is as bullish as all get out. And support will be right here at 34.15. Obviously, if there wasn't as bearish, that's where they'll make a run to immediately. And then the next key would be that our old resistance of 33.93. So it's going to be 34.15. Let's go into the dollar peso. What's helped this market has been these exponential moving averages. I mean, they're just telling you where the market wants to go. We had discussed about this, and this is actually what I use my exponential moving averages are on, which is a 30-minute. And you can see how that's kept the market in check right here. We flipped into the buy mode. But this has been a tough market. I thought we were going to, it certainly looked like it was on its way down to 1868, and then it flipped the deal, and on we went. But generally, we look at this on a 2-hour basis. So let's go into that. And same thing, the momentum changed here on the 2-hour also. You see here? $19,027 is going to be the 38%, but we'll make it up to right there, which is 1904. This market's already had a pretty good little run already. So we'll go with this 19,027, the 38% as being the resistance. Remember, still a seller's market. We're going to have to, but certainly the momentum has changed on this. It certainly looks like they'd make that move to the 38% because you can see here we got past the 23%. The market even went past it, didn't even get much of a correction. Not even a correction, I'm saying they got past it, even dipped a bit. So we didn't even pause at the 23. So that would suggest we'd make this move up to the 38% before you see a decent little reaction, which would take out the highs here. Support. For right now, that'll be 1892. Dollar yen continues to do a whole bunch of nothing, but I tell you what, it's not doing is rallying. And here's that key 1187, which you got above 2 Fridays ago, and it has done absolutely nothing with it. So support will come down here to 1136, and resistance will go right there, 1206. We're above that 1187, but we're actually sliding back below it. And I'm just going to say this is a range because this hasn't done anything in all this time. So we're just flipping that to range. Well, we've talked about the dollar index over the last couple of weeks and the importance of this weekly level. We've even shown here that it's even a key monthly level. Here's on a monthly chart with the dollar index. At 97.89, which confluences here with the 61%. So here's on a monthly chart. So that 97.89 is huge. Let's go move it into the weekly. Right there. And we know we've had the most bulls since 2016. So as I mentioned, when we talked about the analysis earlier in the week, the pullback was even a minor pullback. I mean, it held that 96.81 area here, so it wasn't even much of a pullback. So the only way you're going to knock these bulls off the perch is if you were to get start to get them to think, oh, okay, I can't be long anymore. Would have been close down here to this area here, 96.24 or lower. And we're not seeing that. So they're going to continue to stay long the dollar. And so technically it allows this move up to 97.89. What we do once we get up there, we'll just have to see, but it certainly looks like it's poised for that. Now, that being said, here's that 97.65, and we weren't able to close above it. Be interesting to see what the market does today if we're still not able to make this close below 97.65. Well, if the GDP comes out okay, we'll probably end up taking out that 97.89 and closing above it. But for right now, this 97.65 is key on a daily, but the resistance would definitely have to shoot back up here to this 97.89, that key weekly level, which is also the key fib of 88.29 to 103.83. It's 61%, but that'll be our resistance, 97.89. Support's going to be right there at 97.28. Right there. Oh, looky here. We made it down to the pivot. There it is, 1267. We moved down to the pivot. So that 1267 has been a key pivot on the daily for a long time. You can see here going to close to a year and a half. So I would expect a decent little bounce from here, although with the dollar continuing to move higher, it certainly has applied its pressure. But I like this 1267. So we've seen a $7 bounce off of this area here. And resistance will come in right there at 1280. No changes. There we go. But we did make it down to the pivot, 1267. Let's go and move into the cross rates. And we saw some pretty good action in the Asian session. Quite a few of us were in the room here. There's quite a few peeps. And boy, did we see some action here in the Aussie dollar. Boy, look at this euro too. Few of us got short right up here, right near the top at the time, which was actually just about top ticked it. I was looking at 59.56. We made it to 59.55 and a half. We saw a pretty good little movement down. Look, taking it all the way down to almost 59 before popping back up. Let's go on and take a look at the euro yen though. Aussie yen too took its lickings here. So much for that silly carrot about the U.S. and China talks. Let's go into to the euro pound. To me, this is just a tough one. I don't know what the heck it wants to do. And it's trading such a tight range overall. I did see a pretty good little dip down here, but there's some pretty good little volume coming across right there. 86.84. Well, that's almost, look at that. It's not only 10 pips away. The cable's already gotten whacked pretty good. We'll just go right here with 87 cents, straight up there at 87. And support will come in just a hair below that, which is 86.35. We had a support here, 25.58. Take a look here. Doesn't even seem right. Hang on. But that's what we had marked off. That didn't make any sense. We had it up here at 26.11. So I have the support right here. Marked this off right here, 25.22. I don't know if this was mistyped, but that would have been it right there. We would have marked off right there, 25.22. Let's mark that down. And resistance would come in right here at 25.62. Nice little hammer on the 30-minute. Usually we look on the 2 hour, but we were, like I said, a lot of action yesterday or in the Asian session. And we had 59.54 was a 61%. I was looking for 59.56. We got 59.55.5. Now we did move up a little bit higher. There was that high, we dipped down here into the 30s and made a run back up here to come up here. It looks like about 59. Came short of the 61, and then we saw a pretty good pullback here of about 50, a little over 50 pips. And here we try to come back again here. Resistance and the Aussie's pretty oversold to start with. So we'll go right there at 59.54. We'll go with that for the resistance, 59.54. And for now, we'd have to say this is bullish. Support will be right there at 59.02, which is exactly what we went to. And we're still motoring higher here in the Euro New Zealand. Let's take a look where we stay here on a stand on a fib. Just past the 38% right now, but we also taken out the prior high. And we know we're a bit oversold. Here on the Kiwi, we'll go right here with the 69.47. 69.47 being the resistance. We had 45 before. With support coming in right there. If we get that pullback, because we know we're pretty oversold here on the Kiwi. 68.43. 68.43. So you can get a decent little pullback here. Pretty oversold. This is, we were looking, we had mentioned we did the Asia analysis on a break of the trend. We were looking for 79.50, which it made it down there, and then for potential down here to 79. Well, heck, we even blew through that with the Aussie data. But we did come into this support here, which is going to be 78.58. So we'll use that for support, for our bias chart support. Resistance is going to be right there, 79.35. 79.35 here. Some key support comes in right there at 44.23. Sterling begins to crack. But we are, when we look at the cable, we had our bias chart support 29.16. We took it out by 1 pip. It's holding, but there's still the opportunity for this to go in and even dip a little bit lower. So we're going to go with this 44.23 from the daily. Resistance will be 45.03. Here's another market really took off. I mean, remember we couldn't even get this market couldn't buy a bottom. And look, we finally started to break above here. Made up to this Q84 area here. We were there last night too. I remember saying about pointing out this area here and posting this. Support will be 83.24 with resistance here at 84. And lastly, we'll wrap up with the CAD yen. Certainly, this has the opportunity to move even lower. We do have Bank of Canada today. So you want to make sure you have that a little bit of extra room here. This would coincide right here with the 61%, 82.67. That's going to be our support, 82.67 here. Also confluence, we have a level there, and it's also confluence with the 61%. Well, that long ago, remember when I had this 161% here, 84.31. I actually got short. I think it was 28. Didn't even hang on for that long. I remember doing that. Anyway, let's go 82.67. And that also happens to be that level there. Resistance is going to be right there, 83.51. And that'll conclude the bias chart here. I'll get that posted, and good luck trading, and thanks for joining us here on the European Crossover webinar.